Hey, what's up, guys? This is Cody the Coin Raptor coming at you with another Bitcoin video. So Bitcoin has bounced very nicely off the $60,000 level, and on top of that, we've seen some strong support. We've had buyers coming in here and buying the dip on those huge dips that we've seen over the past couple of days. Now, I said before that I think that strong support for Bitcoin will be at the 60,000 level, and here at about the 100-day moving average at about 58,800. And so far, we've seen that level hold. So it's really important that Bitcoin holds this level. Without it, we're not going to be able to push higher and make a run at about 71,000 anytime soon if it does not hold those levels. So that's what I'm looking for right now. Not much has changed since I made my last video talking about this level, other than the fact that Bitcoin has bounced nicely off of it. This is what we want to see. We want to then wind up seeing Bitcoin push through the resistance here at 65,200 and then go even higher than that. But for now, things are actually looking relatively stable. Now, the next thing I want to talk about when it comes to Bitcoin is Bitcoin dominance. So Bitcoin dominance, or Bitcoin's share of the crypto market, has actually hit a very impressive 55%. In fact, if we back it out here, we take a look at the weekly for Bitcoin dominance, we can see that the last time this happened was back in April of 2021. So it's been 3 years since Bitcoin has been at this level. Not a huge surprise when you consider the fact that the halving is upon us, and that's something I want to talk about a little bit later, and how miners could potentially be at risk of losing billions of dollars from the halving. But the simple fact here is that Bitcoin dominance continues to grow, and the next resistance level that we'd see for Bitcoin dominance is probably going to be up here at about 57% or so. That's where I would put it. But this is not really that surprising given the fact that a lot of the crypto traders are putting their money into Bitcoin ahead of this halving. Now, the other thing I want to talk about is what's going on in Hong Kong. So Hong Kong has actually approved a Bitcoin Spot ETF, all right, and it's going to potentially garner up to $1 billion in assets within the first 2 years, according to Bloomberg ETF analyst Eric Blaunkenas. Okay, so this is something new, something interesting. We haven't seen a new Bitcoin spot ETF since the one was approved in the US, but now we're actually starting to see some other places around the world add to the Bitcoin spot ETFs trading, and I think this is actually fairly bullish for Bitcoin, especially when you consider you're adding potentially up to $1 billion in assets to Bitcoin. So that's just new. That's organic demand coming in from places that would normally not be there. Now, the only problem with this Hong Kong spot ETF is that it's most likely, according to Eric here, he says that most likely mainland China investors aren't going to be eligible to buy Hong Kong listed Bitcoin, those spot Bitcoin and Ether ETFs. Okay, so that's kind of a major hit. The mainland China investors make up a larger part of overall Chinese citizens than just the ones living in Hong Kong. But even with that being the case, up to $1 billion in assets is still pretty significant for any Bitcoin spot ETF. All right, so the next thing I want to talk about is Bitcoin miners. All right, so Bitcoin miners, we all know about the anticipated halving coming up here shortly, but Bitcoin miners potentially could find themselves in some trouble. Okay, so there is a report that was put out here, listed in an article at Bitcoin.com, that said that Bitcoin's fourth halving since its launch will result in miners losing as much as $10 billion in revenues. Okay, so $10 billion in revenues. Now, this is something that's expected from the mining community. They know it's going to happen, and they've been working on ways to recoup that lost funding that would come from them mining. Okay, so this is something that is normal. It's perfectly expected in the market, and so far we've actually seen the hash rate still explode. In fact, we're gonna go ahead and take a look at this real quick. The hash rate continues to move higher and higher and higher. Okay, in the network. So that just shows us that more of these mining ASICs are being brought online, and Bitcoin miners are still attempting to make money off of their mining habits. And I don't really expect that Bitcoin miners are going to be in any sort of trouble with the halving because, again, they know it's coming. They've been preparing for it. But just know that they could potentially lose billions of dollars on this halving when it happens here in potentially 24 hours. Okay, so they're saying April 20th, maybe April 21st. We'll see. It's not an exact science, but the halving is going to be shortly upon us, where the block rewards get cut in half and miners receive half as many Bitcoin for their work. So this is going to be, again, a major event that we see in the next, hopefully, 24 hours or so, and it's going to be driving the Bitcoin market, or driving the story for, I would say, at least the next week. Now, the next thing I want to talk about is Bitcoin options. All right, so Bitcoin options. We have a large amount of Bitcoin options expiring on the 25th of April. We can see here that if you go to Deribit and you take a look at their options, we can see that the calls are going to be worth about $3.4 billion and puts are going to be worth about $2.2 billion, and they're all going to expire here on the 25th of April. So what this means is, if you go and you take a look at the 25th of April, you have a max paying price of $60,000. All right, so what that means, I'm going to go ahead and explain max pain and max pain theory very briefly. Come over here to Investopedia. You look at max pain theory. According to the maximum pain theory, the price of an underlying stock tends to gravitate towards its maximum pain strike price, the price where the greatest number of options will expire worthless. Okay, so according to max pain theory, these traders are betting on $60,000 for Bitcoin by the 25th of April, okay? And given the fact that Bitcoin right now is sitting at about $63,000, I don't think that's too much of an assumption to make. Now, I want to draw some contrast between this max pain price here at $60,000 and the bulls that have these call options set to expire at the same time at $80,000 strike price. Okay, so these bulls worth almost $300 million worth of your call options are betting on an $80,000 stock price by the end of the month. That might be a little out there. I think that's it may still happen, but I think that it's much more likely that Bitcoin will remain near the $60,000 prices. But it just kind of goes to show you, bullish traders right now are betting on 80,000 still, whereas when you take everyone in aggregate, the longs and the shorts, the max pain price is 60,000, and that tends to be where the price will gravitate towards by the end of the month. All right. Now, the next thing I want to talk about is the Bitcoin spot ETFs. So Bitcoin spot ETFs, we can take a look at the ETF flows and specifically what has happened over the past couple of days. We've seen mostly just outflows. On the 15th of April, we had outflows. On the 16th, we have outflows. And on the 17th, we had outflows as well. In fact, I wouldn't be surprised if on the 18th, they also had outflows, but it's probably not going to be as much as on the 17th, for instance. So it seems like running up to the halving, a lot of the, I want to say hype, but the hype has kind of died down for the halving when it comes to a lot of these spot ETFs, and the market right now is moving mostly sideways. It's really difficult to try to figure out where everything is going right now because there's so many different mixed signals going on in the market. But I do personally believe that, again, in the long term, if you zoom out, that Bitcoin will wind up actually moving much higher in the future. I do believe that we can actually go past 72,000 in the long term, reach a new all-time high in the longer term. And by that, I mean at least 6 months from now. Maybe even greater than that. But I always want to remain conservative when I'm talking to you guys about this because price predictions are incredibly difficult when it comes to Bitcoin. So I do believe that long term, we're going to be good. In the short to medium term, we're looking at probably some sideways action. If this level holds that I talked about, 60,000, if it doesn't hold, then we could potentially be looking at Bitcoin coming down into the 50s. And that is a region in which I'd be interested in buying. So again, just giving you guys a quick summary of my thoughts on the market. That's it. Now, let me know in the comments below if you guys think that it's possible that we're going to get that max pain level of 60K by the end of April, or if you think that 80K is much more likely. I'm definitely interested in hearing about your opinions, and I'll catch you guys in the next episode.